interest rates have painted a worrying financial picture for many Canadians. Those with serious debt or low credit rating may benefit from something called a leverage loan. To explain how they work, Peter Sashecki from Everything Financial joins us live this morning. Good morning, Peter. Good to see you.
Nice to see you, Carrie. Good morning.
Okay, so before we get into leverage loans and learning a little bit more about that, let's talk about the news of the morning. The Bank of Canada making its latest interest rate announcement, holding steady at 5%. What are your thoughts on that? This is what economists largely predicted.
It's a joke. It is. And the top 28 economists in Canada have all said that interest rates should already had 2 or 3, maybe even 4 declines. If you read the minutes from the Bank of Canada, I know I'm sounding like a broken record, the Bank of Canada said, we take our direction from the Government of Canada. Unfortunately, the Bank of Canada is no longer independent, and interest rates are being kept artificially high. There is no worry, read the notes, about inflation propping back up or anything like that. This, unfortunately, is a government tactic to delay lower interest rates, and you know who suffers? Canadians suffer, especially the middle and lower class are the ones who suffer with the high interest rates. And it's about time someone sort of shakes the trees and the government does or allows the Bank of Canada to set the proper interest rate policies. Yeah. I feel much better saying that now.
Okay, you got it all out there, and I guess we'll be waiting.
I got it off my chest.
Waiting to see at what point they do lower those interest rates. And you're right, a lot of Canadians are really, wondering they'll start to see some relief. And so let's bring in this idea of these leverage loans that people might use. Tell us what they are and how they're different from other types of loans.
Yeah, an investment loan where you might use money from your own home equity line of credit that is still your money, you're in control. But let's just use $100,000 as an example, Carrie. You put in your $100,000 that you might use from your home equity line of credit, you get the tax deduction, etc. The leverage loan is when the mutual fund company or the custodian, the dealer from the mutual fund company, some other third party will match your $100,000. So now you're getting twice the investment, twice the tax deduction, potentially twice the gain, but what if it doesn't gain and it loses money? That's the problem.
Right. So there are risks associated with this for both the lender and the lendee?
There's no risk for the lender, none at all, because, again, using that $100,000 example, so say it goes down 10%. There's some volatility in the market. So your $100,000 goes down to 90, and the lender's $100,000 goes down to 90, but no, it doesn't. The lender's $100,000 never moves. It stays at $100,000. If it goes down 10%, yours goes down 20% because you take all the risk for the lender. And then you can get what's called a margin call where they're saying you need to put money back in to get, for our 10% that's really you're holding the loss on. There's a lot of risk involved. Don't get greedy for the tax deduction or the earnings. Stay within your own means.
Yeah, it does sound that there's a lot to consider there, but some people would be interested in a loan like that. What are some examples of when people should or should not seek out that kind of loan?
If you have abundance amounts of money, are making money beyond belief, it's raining money, and you have absolutely, so not very often, in other words, and you have no risk whatsoever, why don't you just go and put it all on black or all on red and take that chance instead?
Okay. In other words, it's a risk that a lot of people maybe shouldn't take.
They shouldn't take, but unfortunately some people get sold into this. They get sold into it when markets are really going up and markets are really on a roll. And like, what could possibly go wrong, Carrie? The markets change and they don't keep going up and they don't keep on a roll. And then you're stuck holding the debt for you and the lender.
Yeah, really good information this morning, Peter. I had never heard of a leverage loan, but a lot of people might be considering their options, and that's something that might come across their desk. Peter Sashecki with Everything Financial. Thanks for the information this morning. Have a great day.
Thanks, Carrie. If you hear the word leverage, get on your running shoes and take off.
Okay, sounds good. Thanks, Peter. Maybe get some exercise at the same time.